Today, we're going to be learning about one of the most important lessons in investing, especially in bear markets, which is to never, ever, ever fall in love with your investment. You have to be emotionless. And I didn't understand this in 2018, and I lost more than $1 million because of this. Now, to set the scene for this story, here is a chart of Bitcoin. This is the infamous chart that we've been posting over the last couple of months. We've been calling, hey, Bitcoin, it looks like it's going to crash all the way down in between $12,000 and $16,000. Everybody was saying at the time, hey, you're spreading fear, uncertainty, and doubt. But look at where we are today. We're already at $20,000. We're about $4,000 away from the upper region of our $16,000 target. So what we need to understand is like all of this stuff, I really just want to pump out this type of knowledge and tips so people don't have to go through as much pain as what I've been through in the past. To explain and set up the story here, I started investing in Bitcoin in 2013, at the end of 2013 in November. I'd been researching about Bitcoin for about 6 months before I ever pulled the trigger to actually depart with my dollars and press the buy button and buy crypto for the first time. I really wanted to do as much research as possible and make sure I understood the investment before I bought. And yeah, I decided to buy. And then the price started to tank. As soon as I bought, the price started to go down lower and lower and lower. I'd already learned about dollar cost averaging and all of that, and I thought it was a good idea to keep dollar cost averaging in as the price went down. But what happened to my surprise was the price fell so low that it literally scared me and I started to lose confidence. And then I started to realize I had some holes in my game, which is, do I really know what I'm doing? How come I thought this was fundamentally a great idea? The market cap was in the single digit billions and it was getting cheaper and cheaper every single day. How come I'm not making any money? So I really hit the books hard. I dedicated around 20 hours minimum every single week from 2014 literally onwards, like even past literally until this day. I've just dedicated about 20 hours a week to researching to really understand how all of this stuff works. But you learn very quickly at the beginning because you have very limited knowledge. So you're upgrading yourself very fast. So yeah, I just thought, hey, in terms of self-awareness, I looked at myself. There's generally two types of places that you can lean towards. One is fundamental analysis, which is kind of like Warren Buffett style, reading annual reports, looking through all the company's details and all of that. And I was kind of looking at myself and thinking, I'm pretty good at mathematics. I kind of suck at English. I don't really like reading books and novels that much. So I thought it made more sense for me to learn technical analysis. So I really dove in and tried to learn as much as humanly possible in the shortest amount of time possible, and tried to upgrade myself so I could make more money in the future. And then by this stage, probably at the end of 2015, I probably already pumped out, I don't know, maybe close to 10 books on technical analysis and all of that. And I started to notice that, hey, the trends have now started to change. We're starting to make some new higher highs and higher lows, which is always a good sign. And there's starting to be some bullish patterns like this one here, which is an ascending triangle. So as this is starting to increase and actually starting to go up, my confidence is starting to now actually rise because I'm getting rewarded by the market. During this downturn, like my confidence was at an all-time low because the price was at an all-time low. Even though my knowledge the entire time has always gone up, there is a thing where if you're not getting rewarded financially for it, your confidence just keeps on going lower and lower and lower. But this can also be a trap. When the price goes up more, then you get more confidence to put in more money. And then as the price goes up again, you get rewarded again by the market. So it's a positive reinforcement. And what this is doing is it's tricking you that you're a genius and you know everything about investing, and confidence is just going through the roof, and it can actually lead to overconfidence and you get way too greedy, which is what happened to me. So every time the price is going up like this, you're getting another dopamine hit again and again and again. And then when we start to zoom in here, Then we started to get some bearish patterns like this, like a double top pattern, which led down to a descending triangle pattern. Like these are like the most basic patterns that you learn straight away when you start learning technical analysis. But because of all of these dopamine hits, I had actually gained an addiction to Bitcoin. I had gained an addiction to cryptocurrency. It had literally hardwired in my mind that Bitcoin and crypto, it's the best. I had fallen in love with this asset. And this is a mistake that everybody is making right now. People are in love with crypto, but they can't see it. We've got the exact same bearish patterns here, and we broke down, which we warned about in the last few videos. It's so easy for people to get fooled and brainwashed by their own ego. Like there is this really weird thing where everybody wants to have an opinion about finance. Everybody thinks they know how to make money. And if they put money on the line on that, then it must be the best. So one of the things that I've learned from this experience is I always want to detach my emotions from any investment or trade that I make, any financial decision for that matter. And once I do place the buy button or the short button or whatever button it is, I constantly ask myself, what are the risks? Can I see all of the risks? What am I missing? And how am I wrong? By asking yourself all of those questions, you create a much more healthy environment for you to be successful. If we jump onto coinmarketcap.com, then we can see the last 7 days with crypto has just been really terrible. Bitcoin down 30%, Ethereum down 38%. Binance coin down 25. These are all the blue chips. The more you scroll down, it can get even worse. There's like barely any greens. The only coins that are green are like the US dollar stable coins. So what you need to ask yourself sometimes is, hey, 7 days ago or a month ago or whatever it was, like a year ago, like what was my prediction? And write it down on a piece of paper. And if you were proven to be wrong, then ask yourself, have I been fooled by the bull market? And what is the current state of my psychology? Another way to understand this idea is imagine that you have a puppy. What do? We want to teach it how to sit, right? Like, so every time we say sit, we give it a reward. That's a positive reinforcement. It's now more likely to sit when we say sit. And if it does so, we give it another reward. And slowly over time, we hardwire it into its mind that sit means good. And so that's what can happen to us in bull markets as we put more money into an asset and it keeps on going up because it's a bull market and everything goes up. Then eventually we fool ourselves into thinking like this is the best thing. We fall in love with it. And then it's so hard to part ways, even though we have conflicting evidence that it's actually a great time to sell because it's going to go down a whole lot more. So one last lesson, which is just as important, is in a bull market, here's our money. What happens in bull markets? Our money gets larger and it goes up, right? And then what happens to us? What happens to our confidence? Our confidence goes up because we think we're doing a good job, right? We come to the markets to make money. We're making that money. That means we're doing the right thing, right? But now in a bear market where we start to lose money and we may even lose more money than we began with, what happens to us as a human being? What happens to our emotions? We literally may get so unhappy that we start to get depressed. But what we need to understand is never ever judge yourself just based on how much money you have. You need to think of yourself like a company. Like a company has a balance sheet, it has assets. Some of those assets are physical assets and some are intangible assets that you can't actually see. So what's a good example of an intangible asset? That would be your intellectual property. So if you and your knowledge is increasing, your experience is increasing, then your intellectual property is increasing. No, it doesn't have a dollar figure standing next to it. No, it's not in your bank account. But the more intellectual property you have, the smarter you're becoming. The smarter you are, the more likely you are to make more money in the future. So it's actually an intangible asset that you can't see. And in my opinion, it's actually more important than the money itself, because without the intellectual property, you're pretty much going to always lose the money. So if you're finding yourself in that scenario, don't get too down. I understand how you feel. If you do want someone to talk to, then my DMs are always open. You can feel free to send me a message and let's have a chat about it. Anyway, guys, if you did enjoy this video, please leave a like, comment, and subscribe. I truly appreciate it. And I'll see you in the next one. Thank you very much.